Okay, guys, our first presentation is from Roman.
Hey!
Okay, guys.
So,
Hey!
hey guys, who needs the code here?
I'm not done yet.
Okay.
Waiting. Okay, guys, let's get ready. So, I made
Sean, I don't know what
presentation
this is
about
here.
the Samsung stock, and it's made by me. And first, what is Samsung Electronics? Samsung Electronics Ltd. is a South Korean multinational major appliance and consumer electronics corporation founded on 13 January 1969 and headquartered in Yeongtong District, Suwon.
Could you speak up a little?
Yeah. Oh, question.
Boy.
Were you trying to get us to buy Apple last time?
Well, it doesn't matter. You guys can buy both, but Samsung is better.
Aren't they competitors?
Yeah, they are, which I'll get into later.
That's not cool, bro.
Okay. The company's main product are phones like the Samsung S21 Ultra,
Oh, hell no.
which I have. And the CEO is Han Jong Lee.
I'll say no.
Very should- Okay, why you should invest in Samsung stock now is because Samsung stock is starting to grow or to show signs of growing massively. The Samsung stock
Massive?
also has really good stats.
Wait, so how is it showing signs of growing massively?
Well, cause like
Massive?
you can see like how it like grew here, and then there's like a U thing, and then it might grow.
Well, yeah, but
back
didn't
up.
we already go over how technical analysis is a bad way to predict stocks?
Yes, which now we're gonna do technical analysis, but Samsung's PE ratio is 11.6, which is actually really good. Because a good one is considered to be 20 to
What?
25, and the lower the better.
Actually, I'm not even sure if that's right.
No, it is. What's not right?
387 trillion. Oh wait, that's Korean. Never mind.
Oh yeah, that is Korean.
Oh yeah.
Okay, but yeah, the PE ratio is 11, which is actually super good. The dividend yield is 2.5, which is also pretty good. And each share is worth 57,000. Guys, be quiet. And the Samsung stock market cap is 387.2 trillion. That is around 10 times greater than the United States of America debt.
Wait, so what is the average PE ratio in companies that are in the same industry as Samsung?
Well, for example, Apple's PE ratio is 30, which is way worse than 11. And Apple is the biggest competitor, which is the next slide. Samsung's biggest current competitor is Apple Inc. or INC. However, Samsung is a better company to invest in, and in general for multiple reasons. First, let's talk about the product. First, Android is a better looking phone in general. It looks more sharp. It looks more sharp. It also has a better camera. Samsung has a significantly better PE ratio, being around 11, while Apple's is 30, which is terrible. Samsung has a better dividend yield, being at 2.5, and iPhone's is only 0.3, which is greater the better. Lastly, Samsung has a market cap of 300 plus trillion, while iPhone's is only 3 trillion. and also, this is
Wait,
Apple's.
hey Roman, is that 300 trillion in Korean won or something?
Yeah, I wasn't really sure about that.
I'm looking this up.
But this is Apple's terrible stock declining day by day.
Is that current?
Yeah, that's current.
I was doing Apple right now.
Search it
looks
up.
Totally different than that. 'Cause it's actually I'm an Incline right now.
Oh well, if you go to 2 days, then it goes down. I don't know. That's what it was one at a time when I.
He has a question.
What?
How much did you say Apple's was?
3 trillion.
Well, I just looked it up. Samsung's only about 200 billion.
Well, well, that's because this is saying in like Korean, like young, whatever. Like
Okay, well,
it's not
US
actually.
dollars. Apple is about 5 times
Okay,
more.
Well, that doesn't matter. The market cap doesn't matter. It's the stock. Like, it's just for the
But it
information.
doesn't matter.
Basically, doesn't matter. No. Yeah. Anyways, the PE ratio is better. Dividend yield is better. That's all you have to know. And Samsung is the best phone company in the world with the best product
Okay,
in
so
stock,
you're up next,
which
right?
destroys every competition out there. Which is why you should invest in it now if you want to get rich. What questions?
If it's destroying all the competition, why is it doing worse than Apple?
It's not. It's doing better. Next.
No.
Are you a good boy?
No.
For Samsung?
Okay. Okay, everyone clap for Roman.
You're off about $300 trillion.
Bro was off by billions.
He was off by 300
This is my trick.
trillion.
It caught up this whole part. But
It was 200 billion.
Bro, there's no way.
Okay, so what's your name?
Kevin.
Okay, everyone, give it up for Kevin. Wait, hold on. Can you hold this mic and click this button to go next?
Okay. Testing, 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 testing. Okay. Testing? No.
Yes.
Which stock should you invest in 2025? There's a lot of stocks. But the one that I chose is
RKLB.
all right, RKLB, Rocket Lab USA Inc., or RKLB, is a space company which designs, manufactures, and launches rockets and spacecraft. So key features we're going to be looking at for this stock is the price to book ratio, or PB ratio. It shows how much investors are willing to pay for each dollar of a company's net assets. And we're also going to be looking at earnings per share, or EPS, indicated how much profit each share generates, used to also see companies' profitability. So we'll take a look here. So this is Rocket Lab USA Inc. This is a photo taken today. So it was at $19.15, and this is over the year scale, and you can see it's gone up. And if we look here, that's pretty massive right there. 378.75% increase over a year. So here's the.
Someone has a question.
So
Go
this, this is US dollars and not whatever the fuck Roman said.
It's US dollars, rest assured. So the EPS is negative 38 cents, which earnings per share, that's correct. Well, it's negative, but if we look at the PB ratio, it's 24.81 cents. So that means the investors are actually buying it more. So that means that it could have more potential in the future. So if we go to the next slide. We can't watch this video. That's a shame. I touched the video on here, but basically it's comparing other companies in the same industry, which is aerospace and defense. And I wanted to look at some of this, but I guess we can't. But it has one of the highest market values compared to these other stocks. And I guess that's all we can see. All right. So my price estimation by the end of the school year. I'm going to be honest, I'm just guessing. But I think a solid $23. It's at 19 currently. $23, that's pretty good. By the end of the school year. So yeah, that's my presentation. Thank you.
Okay, Ishan, so
The growth rate over time.
This is if you know I shared it to you, and I just loaded it on here.
wait, what?
Can I load? I think I showed it to you.
Oh yeah, wait. You have an HDMI cable, right?
Oh yeah.
Wait, no, you don't.
I do.
Oh yeah, you do. Okay, so just plug this in. Can you also hold the mic too?
Okay.
Hey Kevin, where is the mic? Oh, okay, yeah, thanks. Okay, so you know how to use this, right?
What?
Just drag this.
Oh yeah. I know how to use it.
Okay, yeah, and hold this. Yeah.
Hello, everyone. So, do you guys know what company this is? Yep. Google. You probably use this every day. But did you guys know this company is severely undervalued? Maybe. Because Google, according to the DCF model, which uses all its cash flow and compares it to past years, its fair value should be at $250, but it's around 180. And why is this? Probably because Google has skill issue. But many financial analysts, basically people smarter than us, they say Google's supposed to go up. And in fact, 48% of financial analysts say it's a strong buy. And if no one says it's a sell, they're all saying strong buy or strong hold. Google is also the lowest it's been in 52 weeks after the Trump incident. So there's that. Now, do you all know the piece of technology that's probably going to change the world that we use today that Google has? Not AI. In fact, this AI is trash. As you can see, these are all instances of the AI, and this is how the AI works. It's not that work. Huh? Huh?
Whoa!
Okay, so it's not AI, because Gemini is a trash AI model, but it's something called quantum computing. The thing about quantum computing right now, it's useless. There's no real world uses. Everything quantum computers can do, a real computer can do. And so, Google's the number 3 competitor for quantum computing. They have a quantum computer called the Sycamore. It's kind of useless. It's just like a, huh? Sycamore? Yeah. No, it's called Sycamore, like sycamore tree. So Sycamore, it's also developing the Willow, and this quantum computing is huge because companies like Microsoft, they made the Maharana. I don't know how to pronounce it. People call it the marijuana chip, but it's the Maharana chip. Looks like this. You can hold it, but that's not what I'm trying to say. Google has a huge lead on quantum computing, and estimated by 2034, this is how many millions of a dollar quantum computing will be worth.
I don't know.
It'd be worth around 18. A dollar to million ratio, it's 18 million. So around, I think 1.8 trillion should be its market value at 2034. And Google has a huge lead already because Google has been doing this for 20 years. And they're the number 3 competitor. So buy Google, guys. All right, that's it.